Well, hello everybody, and welcome to Middle Class Investor. It is, what day is it? It's the 13th of October, and I'm recording on Sunday at 9:18 a.m. So, got a chart of the S&P 500 up here. See right here, and a similar pattern we've been looking at. We had a huge day on Friday. In fact, let's just pull up a daily chart and look at the daily. You can see what happened. Let me zoom in a little bit. There we go. All right, you can see here we gapped up, this big gap up, and then ran up and then sold off. Now, the sell-off is not insignificant here, but this gap to me is more significant. So let's talk about the two scenarios. I think first of all, it's very likely, especially if we get Monday or Tuesday, somewhere during the week we get the candle looks like that. In other words, we get a close below this low here. Then that could mean some pullback, and it could mean that this high is going to hold. Now, I think the more likely scenario, because of this gap, anytime you get a gap, it likely means you're in the middle of a trend. There's wave 3, and it likely means that we've experienced some wave 3 of 3, but that would mean there's a lot here to overcome for a wave 4. But I still think the internals, and I'll show you a chart from Elliott Wave. They look at the advanced decline. They also look at something called trend, and those numbers really forecast some sort of move higher, likely. It's not for sure. There's nothing for sure in trading and investing, but that's kind of what I'm looking at right now. It also, by the same token, this very much looks like an A. Here, let me scoot over a little bit. B, C rally. It's just hard to see, what all this is and what all this is. So, especially this, I don't know. It's hard to see 5 waves in here. So, I don't know if you're in your 401k, if you're at risk, you might want to, wait for higher prices. I would say that if certainly by the end of the week, if we get a week where this gap, even if it doesn't fill, let's just say it, we get a close below this low, that's pretty bearish, and I would maybe go ahead and exit. So that's kind of how I'm playing it. It's it's a challenge when you're at the top here, and the way markets top is they top based on hope. I'm going to show you a gold chart here in a minute, and we'll look at the difference. But equity markets top on hope, and so they kind of die a slow death. It takes a long time for them to top, and the fact that this is such a large, it covers so much time and everything, just shows you how big a trend we're looking at correcting here. So, from here, what is that? That's early 2018 to now. So that's a big long pattern. Anyway, that's kind of what I see on the S&P 500. The Dow looks similar. The Nasdaq actually looks a little weaker, although the moves up and down have been bigger. So, which is pretty typical of the Nasdaq. Here's the ES. There's a lot more. There's no gaps on the ES, so you can kind of get a view of what's going on there. Let's look at the euro. The dollar, I think, is probably topped. You can see on the euro, I've got kind of a 1-2 here. and we've been talking about this, but this looks pretty good. Notice back here on this low, like pretend like this data is not here. On this low, notice we didn't have a close above the high of that low, and so it ran up a little higher, rolled over. Now we've got a new low, and now we have a close above this high, above this low, the high of this low. And that speaks pretty well for this downtrend is over. It doesn't mean there's not going to be another pullback, but if we get another pullback, it should be to a higher low, in which case would be a great place to enter. So that's what I see there. Now, I'll show you the Elliott chart here in a minute, but they show this kind of being an ending diagonal. You know, maybe it is, maybe it didn't. I don't know. But if if it is an ending diagonal, that usually does portend the end of a trend. So be something to look out for. The dollar looks kind of like this, but in the opposite. So if you, I can't, on profit charts, you used to do Control U to get it to flip. I guess you don't do that on I don't know what you do to get it to flip on these, but basically the dollar looks just like this. The dollar looks like it's, instead of it's about to go up, it's about to really take a big fall. The British pound was in the news a lot the other day. They had a pretty big move in the British pound. I'm going to take this off, and I just want to show you kind of another scenario. But see, there's a kind of a low. There's a low here, and we had a close above it, and the market did pull back, but it pulled back to a lower low. So this rule doesn't always work, but it does work pretty good most of the time. In fact, it worked so far. It's worked here. So here was a new low, and then we had a close, above that low. Now the market ran up a little bit and then since pulled back. But then look, it followed through to the upside. So this is a huge day in the British pound. This is because the dollar was down, but the British pound was way up too. So relative to other currencies. All right, let's look at oil. A lot going on in the oil market. A lot of talk about the oil market. I was going to try to scoot over a little bit more, but it won't let me do it, so I'm not going to. So I think oil is probably in some sort of counter trend rally here. It's going to migrate its way up, maybe a little higher, maybe to these moving averages, maybe somewhere around in here, and then we should see oil, kind of make its way down into this area. A lot of people talking about 40 as a target price. The inventories are pretty high on oil. Of course, they weren't high on oil back here, the inventories, but we were talking about the market coming here. So, I don't know. The market, it's kind of interesting after the fact. Now we're at this point we're starting to see that inventories are getting high. Back here, inventories weren't high, but the market sold off. So, go figure. There's a lot of people that talk about causality in the market. Maybe in commodity markets, there's more causality. This is what I was talking about with commodities topping. They top more on fear. So what happens is, there's like fear of running out or something going on here. So, or some sort of fear causing these prices to go higher. Whereas, like I said, equity markets, they tend to kind of have a rolling top because they tend to top on hope. So these are just differences between the two markets, between the two types of markets. Let's look at gold. Gold, may have finished its little run up. We've been following it closely. Looks like it's done. It's about where I drew this pivot. I don't know how long ago I drew that, but it's about where I drew it, and it's starting to kind of make lower highs and lower lows. If that holds, it should accelerate here in the next several weeks. If not, we should get this should be a low, and we should start getting some marginal highs above this last candle here. And if that's the case, then we should make a new high. but it looks very weak here. If you look at the MACD is rolling over and has actually crossed the fast line. I mean, the fast line has crossed the slow line. So likely the top of oil, at least the intermediate top, is in. And as you recall, we had this long-term target here below $800, which corresponds to this previous fourth wave low into the high. So, and that's typical where an uptrending market might retrace to. All right, so that's oil. Silver looks maybe a little bit weaker because it never even made a high, and silver could be in some sort of this B wave could be more of a sideways wave, in which case it shouldn't go down below this. If B is not complete, it should maybe come into this area around 1475, and then trade back up to 18, and then maybe break out up or break down. I'm not sure which. Could be that sometimes the B wave is just a consolidating triangle that gets narrower and narrower, and then it breaks down. So I would say if oil breaks down, that's likely what's going to happen in silver. They tend to follow each other. And let's see, what else do we want to? Let me go show you the Elliott charts for this week. Again, this is the likely scenario, and only the reason is because of this gap. Because of this gap and because of the internals. So the internals were like, let's see, yeah, so right here, the advanced decline ratio was 2.93 to 1 at the end of the day, and the trend value is 0.56. So these values are pretty consistent with future bullish behavior, not future bearish behavior. So I would say this is the likely scenario. This is the other one they drew, where C is topped, and we should start rolling over, and that is possible. It's just, I think this is more likely. You can see this is the Dow Jones Industrial Average. The NASDAQ is, I think, a little less in question. It looks like it has topped and will make some sort of C down in a 5-wave move. One's already happened. We've had 2. Now we've got maybe another 1, 2 potentially. Or they're saying potentially that it could make a running triangle, so which could take a long time. All right, this is another chart that I wanted to show. This is the when they talk about U.S. long bonds, we're talking about the 30-year bond, and so you can see the 30-year bond has made its initial move down. That's what this 1 is, and then all this was retracement of this move down, and you can see the behavior we got in the bond market last week is kind of indicative of where we are. So let's say this move was pretty violent, and then this 5th wave move is violent, but we should have some sort of retracement, and I would say probably into this area between 164 and 162, so about 163. Not sure what that equates to on yields. Probably slightly lower yields, maybe 1.5 or something like that. One. Well, I'm trying to remember what the long bond is. Well, I think it's somewhere around 1.9, something like that. So we could see yields push back up into the 2s, the low 2s or something. But if this is accurate, which it looks pretty good the way they've got it charted here, you're going to see the bond market really accelerate down below this low and further. So that'll be interesting. Here's the dollar index. So you can see this kind of ending diagonal pattern where you had 1 up into here, 2, 3, and 4, and then see how it's narrowing, and then you had ABC 5. So they're saying the dollar is done going up, and its move now is to the downside. So as most of you know, I continue to try to get long the euro. Been kind of bouncing in and out of it just to keep my risk low, but I'm hoping to get into a place and stay in for some period of time. So, all right, I guess that's it for this week's Middle Class Investor. I hope if you had any questions about the market, we've answered some of them here. We'll close with this picture of the SPX. Is this the very long term? Yeah, this is the long term. So I can only go back to 2001 here, but this right here, just to remind you, is a wave 4 low. So when the big bull or big bear market does start, which eventually will, this is also a wave 4 low. In fact, this pattern that's been setting up here is like a smaller version of this one that started back in 2000, where this is A, B, C, kind of a smaller. Like if you look at this, you can kind of see an A, B, C, D. You can kind of see this expanding triangle. This one kind of expanded, but it was done here. This low and this low correspond to each other. So it wasn't exactly the same pattern, but very similar. So, all right, everybody, that is about it for the week. If you have any comments or you want to talk about anything in particular, leave the comments in the comments section on the YouTube channel, and we'll talk to you next week. Thanks, everybody. Take care. Bye-bye.